What's going on with all the institutional investors entering the crypto space? Is it going to change the investment landscape, the type of deals that we're looking for? And what happens when one of your positions goes down more than you expected? What do you do about that? How do you know when you should continue to hold or get out? Those are questions we're going to answer, so stay tuned. Welcome back. Today is the question and answer series. For those of you guys that are new to the channel, every Monday I take questions that you've left on other videos that I do and I answer them. If your question is picked for one of the questions to be answered on video, you earn $10 in Bitcoin. And if it's the question of the week, you get $50 in Bitcoin. The rules for you are: 1, you have to be subscribed, and 2, you have to request the money from me. So if you tune in, you hear that your question was picked, you have to message me to get your money. I'm not going to chase you down. Leave questions on any of the videos that I do during the week and hopefully you get picked. All right, so getting right into it. The winner from last week is Ryan McFarlane, and he wrote a question about the cannabis industry. That one was one that picked up a ton of feedback. Ryan, if you're watching this, make sure to hit me up. You got $50 waiting for you. We have one this week from Idealsceneprod. All right. I have a 17-year-old who wants to get a business degree. I wanted to give her a high-level overview of how a business works: service versus a product, income versus expenses, etc. Any suggestions? This is such a broad question. It's really hard to get in because how does a business work? I mean, there's a million moving parts. You want to give her a high-level overview of how a business works. So for the most high-level view, what I would say is that the way that a business works, the way that you make money for having a business is by serving other people, right? That's a big shift. You have to shift your mindset. So right now there's a lot of talk in the media. There's actually some politicians right now putting bills together. They want to make it seem like being rich is a problem, being rich is greedy. They're trying to say that no one should be a billionaire. But I see that there's really nothing further from the truth. In order to make money, you have to provide value to other people. In order to start a business, I want to serve other people. I want to solve other people's problems. Now, the bigger the problem and the more people that I serve, the more money that I'm gonna make. If I make a lot of money, I wasn't greedy. I provided value. I served a lot of people. So to give your 17-year-old the high-level overview, as you've asked, of how business works, that's how it works. The more value you provide to the more people, the more money you're going to make. So when you're looking at businesses, think about problems and solutions. Identify who it is that you want to work with, what their problems are, how you can solve them. Hopefully you're watching this video and send me a message to claim your $10. The next question is from Asian Miracle. Question: is there a way to be an absentee landlord and earn recurring rental income without worrying about collecting monthly rent? If there is, can you please explain how it works? I picked this question because it's a question that I get a lot, surprisingly. Is there a way to be an absentee landlord? Of course, 100% there is, and you should be. Instead of worrying about collecting rent, yes, of course. Why would you want to worry about that? You never would want to worry about that. You used a property manager. So when you're looking at investing into real estate, look at that as an investment. You're not looking for an extra job. You're not looking for a side hustle. You're looking at it as an investment. So you say, okay, my rent is going to be $1,000 that I'm going to collect. My mortgage is $500. My taxes are $100. My insurance is $80. Put $200 a month into maintenance, and I'm going to put $50 a month into property management. That's part of your expenses. Your profit is what's left over after you've paid all those expenses. Typically, property managers will take about 10%, plus or minus, depending on who they are and what you've negotiated. But they take care of everything. They find new tenants. They run the ads. They find new tenants. They do the screening. They move them in. They move them out. They collect the deposits. They collect the rent. They manage all the repairs, all the maintenance, everything. I own properties that are rented out all across the country. I don't ever go out there. I don't ever travel to go see them. All I do is I get an email at the end of the month with a statement. Here's how much we collected. Here's whatever maintenance we had. And that's it. Yes, 100%. There is a way. Find a property manager. Everybody should be doing that. You're not looking for an extra job. You're looking for an investment. So hopefully that makes sense. If you're paying attention to this video, and which I know you are because you comment on almost every video, collect your $10. Our third question is from Dushyant Khichi, if I said that right. Hey Mark, love your content. Thank you very much. Lately, institutionalization of the crypto industry is something that everybody has their eyes on. But most of the institutional investments are going into infrastructure companies such as exchanges, custodians, etc. Is it possible that institutions may never get heavily into crypto assets, as they can still make money by simply investing in companies that do well, irrespective of the market conditions? Let's break that question down. Institutional companies, everybody's looking, everyone has their eyes on institutions coming into the crypto space is what they're saying. But it looks like these institutional investments are going into infrastructure companies, exchanges, custodians, etc. And the question is it possible that institutions may never get into crypto assets as they can still make money by simply investing into companies that do well, respective? So if you think that they have this strategy where they can invest into companies that do well irrespective of market conditions, then you should probably do the same, right? I talk about all the time, success leaves clues. And so you want to see what other very successful people are doing, and maybe you want to do the exact same thing. So if you're seeing these institutions having these strategies where they're making these investments that do well irrespective, like you said, of market conditions, then why not do the same thing? You said they're investing into exchanges. Well, you can invest into exchanges. You can buy Binance Coin, right? You can have KuCoin. There's a bunch of ways that you can get into exchanges. But you're saying that those are not crypto assets. I'm not really clear. A crypto asset is such a wide, general, generic term. Anything that is in the crypto space, technically, I guess, would fall into that crypto assets. I will say that I have seen quite a bit now, like the landscape, the investing landscape is changing, where we are starting to see some of these VC funds and what you call quote unquote institutional investors are starting to take private equity in deals before they release tokens and before they're open to the public. It's possible to follow their lead. If you think that strategy works and that's a strategy that you want to employ, then you should try and copy that and invest in those same areas. So hopefully that makes sense. And if you're watching this video, make sure to claim your $10 in Bitcoin. Last question is by Jake Kaiser. I'd like to know how you deal with long-term investments that you are sure will go up massively in the future, but they're not doing so well right now. How do you deal with the disappointment and the worry about losing your money? What do you do if it goes up? Or what do you do if it goes down 10%, down 15%, down 30%? Do you sell at a small loss and try to buy back lower? How do you know if you should hold or sell? I've had crypto investments drop and keep on dropping to 60% or worse. I've had them drop about 30% and then rocket up 180%. Okay, Jake, this is a great question. I'm glad you asked it. So I'm gonna answer this, and this is something that hopefully everybody's stuck around to hear this one because it's a big one. Let me give you an analogy. Let's say that as a real estate investor, what I want to do is I want to buy real estate that's undervalued. So let's say that I was at my city council meeting and I heard that in 10 years, they're going to develop this area that's outside of town and they're going to bring in a big sports team and they're going to build a stadium there. And right now it's kind of out in the boondocks. Let's say it's 20, 30 minutes from town. Nothing really going on out there. But I hear that that's the plan. I might want to go and I might want to buy some land around where they bought the land for the stadium. Because once that stadium's built, all the infrastructure goes in around that, well, that land could be worth some money. I believe that that's going to happen in the future. I bought land around it. My investing thesis, the reason why I bought it is because I believe it's going to be worth more once that thing happens. That's a 10-year plan. So let's say on like year 2, year 3, the land that I bought actually went down in value and now it's worth less than when I bought it. Well, how do I, as you put it, deal with the disappointment? I don't really care because I didn't buy it for 2 years or 3 years. I bought it because in 10 years, when that stadium is built, the land will be worth money. So what I do is I check on the project. The thesis I bought it so when the stadium is built, it's being worth a lot of money. Is that still on track? Is that still working to be true? Did they buy the land? Have they got the financing? Do they have their investors? If all those things are happening, then I know the project's still on track. As long as the project is still on track, if my investing thesis is still true, then I stay in the investment. If land goes down, maybe I buy more. I buy the dip, right? I certainly wouldn't want to sell out my land and try and buy back in cheaper. I wouldn't do that. I might buy more if I could. But as long as that thesis is true, as long as they're on track with that development, I stay in the deal. Now, what if something happens? They discovered something with the land or something with the planning, and all of a sudden now they can't do it anymore. Something happened, and now the deal's off. Well, if I find that out, then I got to get out as quickly as I can. The reason why I bought that investment, that thesis is not true anymore. So now I have to get out. If you bought something, a long-term investment, because you believe it's going to go up in the future, but it's not doing now, will you keep asking yourself, do I still believe it's going to do well in the future? How do you deal with the disappointment? And how do you protect yourself? You do that through position sizing. So you put small, even amounts into certain deals. You're basically investing into like venture type deals. So you have to understand some are going to lose money and some are going to make a lot of money to make up for that. So you use even position size, and that's a whole another topic. You can link to a video about asset allocation and portfolio size management that will help you out with that. And that's it. Hopefully that makes sense. If you're watching this video, make sure to message me to claim your $10. That's what I got for the week's questions. Make sure to leave questions on any of the videos that I do. Hopefully you get picked and get some money. Give me some thumbs up and like this video if you like it. Thumbs down if you don't like it. All right, that's it. To your success. I'm out.